We want to earn significant income through investing or achieving financial independence before retirement. There are so many options out there. Just Vanguard itself offers over 100 ETFs. In this video, I will introduce to you 6 great Vanguard ETFs to buy and hold forever. Stay tuned until the end. The last ETF can potentially make you close to $2 million by only investing $10,000. Number 6. We have Vanguard Dividend Appreciation Index Fund, ticker symbol VIG. As the name indicates, the fund is investing in dividend stocks across diversified market capitalization. It is a passively managed fund that tracks the performance of S&P U.S. Dividend Growers Index, measures the investment return of common stocks that increase dividends for years. The main sectors are technology, financials, healthcare, and industrials. Technology may not pay out good dividends, but they have good growth over the years. The ETF allocates 22.36% of the capital to it, which gives the fund some upside potential and growth. Sectors like financials, healthcare, and industrials are mature and stable. They are making steady dividend growth year over year. Companies like JP Morgan, United Health, and Caterpillar have been in business for a long time. These companies have solid track records in paying dividends in the past and are expected to be the leaders in their respective industries in the future. The current dividend yield is 1.76%. Not a very impressive number, but the dividend growth rate is 8.49% per year over the past 10 years. On top of that, the share price appreciation is 7.89% per year. For a $10,000 investment, your portfolio would grow to $22,993 after 10 years. In 20 years, the investment would become $58,554. After 30 years, the investment would become $150,719 with an annual dividend of $3,155. This ETF is not exciting, but very steady over the years. Number 5. Let's check out Vanguard Healthcare Index Fund ETF shares, also known as VHT. This ETF invests in the broad segment of the healthcare market. As a sector ETF, VHT owns 415 companies to diversify its risks. The top 10 holdings include well-known companies like Johnson & Johnson, AbbVie, and Pfizer. They are taking up 48.61% of the portfolio. The fund was launched in 2004. Now the asset under management is $21 billion. So this fund is well established and continuously attracting more investors. In the past 10 years, the fund had an amazing growth of 146.73%. It doesn't seem like very impressive growth compared to tech companies, but it is very steady growth and lower volatility. As the U.S. population ages, the demand for healthcare and its services is expected to be higher. In 2022, the U.S. healthcare spending was $4.4 trillion and is predicted to soar to $8 trillion by 2035. We can see the demand for healthcare is growing, so these companies in the portfolio will benefit from the upward trend in the coming years. The current dividend yield is 1.35%, and the 10-year dividend growth rate is 11.81% per year. In the past 10 years, the share price appreciation is 9.45% per year. For a $10,000 investment, your portfolio would grow to $25,445 after 10 years. In 20 years, the investment would become $71,251. After 30 years, the investment would become $226,340 with an annual dividend of $6,010. Healthcare has great potential to grow in the future. Warren Buffett once said, "The trick is to essentially buy all the big companies through the S&P 500 and to do it consistently, and to do it in a very, very low-cost way." The S&P 500 is recommended by Buffett all the time to individual investors. So the next one on the list is Vanguard S&P 500 ETF, ticker symbol VOO. The fund invests in the 500 largest companies in the U.S. companies like Microsoft, Apple, and Broadcom. All these companies are domestic, but they have business around the world. So you benefit from global economic growth by investing in VOO. Since 1965, the annual return of the S&P 500 has been 10.2% per year. So the growth amount can easily beat the inflation and achieve capital gain. It is a simple winning strategy for long-term investors. All 500 companies that are in the large cap category tend to have $10 billion as market capitalizations. They are usually stable and less risky compared to mid and small cap stocks. That gives investors peace of mind. The expense ratio is 0.03%, so the cost of owning this fund is very low. The top sectors are technology, financials, healthcare, and consumer cyclical. Tech sector is still having good upside potential as the technology continues making progress. The rest of the sectors have steady growth and are paying good dividends. The current dividend yield is 1.32%. It doesn't seem very impressive, but the 10-year dividend growth rate is 7.14%. It is a rapid growth. The share price appreciation is 176.45% in the past 10 years. So, the growth is 10.70% each year. For a $10,000 investment, your portfolio would grow to $27,391 10 years later. In 20 years, the investment would become $81,449. In the 30-year mark, the investment would become $236,875 with an annual dividend of $1,093. Number 3. Let's check out Vanguard S&P 500 Growth Index Fund ETF, known by the ticker symbol VOOG. Similar to VOO holds 500 large U.S. companies, VOOG holds only 231 large U.S. companies that are expected to have high growth in the future. So, VOOG is picking the best of the best. By looking at the price appreciation in the past 10 years, the result speaks a lot. VOO had 172.80% in growth, while VOOG had 236% in growth. The biggest contributor is the tech sector. VOO has 30.60% of the portfolio investing in it, but VOOG invests an even more percentage of the fund in the tech sector. It is up to 48.61%. This is almost half of the portfolio. That explains VOOG's high growth over the years. Other than tech, VOOG also invests in great companies in consumer cyclical and communication that have performed very well over the years, such as Home Depot and Netflix. The expense ratio of owning VOOG is higher than VOO, but still at an affordable rate of 0.1%. Currently, the asset under management is $10 billion, so it is favorable to investors. The current dividend yield is 0.89%, and the 10-year dividend growth rate is at 7.5%. This does not seem very impressive, but the share price appreciation is at 12.88% in the past 10 years. This is outstanding. For a $10,000 investment, the portfolio would grow to $31,508 in 10 years. After 20 years, this amount would grow to $109,901. Waiting 10 more years, it would be $377,237. The annual dividend is $675. This ETF is not about receiving a huge dividend payout, but share price appreciation. This is almost 38 times of what you originally put in 30 years ago. The last 4 ETFs were solid performers, but the next 2 have the potential to deliver high growth and give you outstanding returns. Number 2, let's check out Vanguard Mega Cap Growth Index Fund ETF, ticker symbol MGK. As the name indicates, the fund is investing in mega cap companies. That means all companies are having market capitalization over $200 million. Like other ETFs, MGK also invests in 10 sectors with significant emphasis on technology, consumer cyclical, and communication sectors, which together comprise 80.29% of the portfolio. The technology alone counts for 51.24% of the investment, representing half of the portfolio. Major holdings include industry giants such as Microsoft, Apple, Nvidia, and Amazon. The fund aims to target the largest growth stocks across all sectors, justifying its heavy investment in tech companies, which are known for substantial growth. In the past 10 years, the fund had an amazing 289.86% return just in the share price. For a $10,000 investment, your portfolio would grow to $34,808 after 10 years. In 20 years, it would become $136,692. 30 years later, the investment would grow to $533,577 with an annual dividend of $75. As we can see, this ETF is also focusing on capital appreciation instead of dividends. It is a great option for investors looking for high growth, especially tech enthusiasts. Number 1. We have Vanguard Information Technology Index Fund ETF, ticker symbol VGT. This fund tracks MSCI, U.S. Investable Market Information Technology 2550 Index. So we know VGT is investing in technology companies in the U.S. It is a great option for investors who like to capitalize on technological advancement. In fact, this fund invests over 99% of the capital in technology. Out of the top 10 holdings, 9 of them are tech stocks like Microsoft, Apple, Nvidia, and Broadcom. Since the fund was launched in 2004, it has been growing steadily and exploded in the past few years. Amazingly, the fund had outstanding growth of 470.83% in the past 10 years. This is almost 5 times in return. The famous QQQ only had 402.20% in the same time period. Now it manages $77 billion worth of assets. So we can see it has great credibility. The expense ratio is 0.1%. Compared to the high growth over the years, this is negligible. Now the dividend yield is 0.71%. This is not a very impressive number. However, the dividend growth rate is exceptionally high at 14.36%. The share price appreciation is at a much higher rate of 19.02% in the past 10 years. For a $10,000 investment, you would have $50,112 after 10 years. 20 years later, your investment would grow to $295,020. In the 30-year mark, your investment would have the potential to become $1,716,177. The annual dividend is $3,054. VGT is a very high growth ETF with dividend reinvest making this huge return as time goes. These are the 6 best Vanguard ETFs to buy and hold forever. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.